afternoon, and welcome to the Women's Business Development Center's Sales Tax 101 webinar today. We are super excited to have a WBE from the Dallas, Texas area, Chanel Christoph Davis, who has been doing sales tax her whole career. And her business, Davis & Harmon, which does sales tax advice for both small and very large businesses across the country, is entering its 19th year. And Chanel also asked me to make sure that you all knew about her podcast, which is very cool. It's called Follow the Leader. It's available on all podcast platforms, and it features women CEOs and leaders. So very excited to have her on with us today. And just a couple quick housekeeping items. There is a handout which you can download during the live webinar. It is on should be in the toolbar that's on the right-hand side of your screen, the GoToWebinar toolbar, and it's called Handout. You just click on that little arrow, it should open it up for you, and it's a PDF that you can download. If you are watching this when it has been recorded and archived on our website, you will not be able to download it. So I would recommend that everyone download it during the presentation, otherwise it won't be available. Second thing is that this podcast will, or I'm sorry, not a podcast, this webinar will be archived on our webinar, on our website. So you will be able to access it from our website more or less starting tomorrow. The slides are not available otherwise. And the third thing to let you know is that if you have any questions during the program, you can just type those questions into the little question bar in the GoToWebinar toolbar. And if I know that Chanel's going to be getting to that material later, we'll just, pass on the question and she'll continue. But if it is something that she isn't planning to answer, we can discuss it, and then we'll make sure at the end of the program that all of the questions have been answered. And I think that is all. Everybody is on mute. Just because of the number of folks on the call, we're going to just ask you to use the question feature. The raising hand feature doesn't work very well, so we're not going to use that. And without further ado, Chanel, thank you again so much for sharing your expertise with us, and I'm going to turn it over to you.
Thank you so much. I'm so happy to be here today, and I was excited when I was invited by the Women's Business Development Center to do this podcast. This webinar. We keep saying podcast. This webinar is really intended to be a very general introduction to sales tax. So we're going to talk very high level. Although if you have specific questions, use the chat function. We'll try to address those. And we're all former sales tax auditors. We've worked for different states, as well as we're all former Big Four public accounting consultants where sales tax is concerned. And as Karen said, we're been doing this in our entire career. So we live, breathe, and do everything where sales tax is the focus. So let's move forward and begin. Okay, trying to move to my next slide. All right, so we're going to start off with a poll question so I can kind of gauge the audience and your level of experience and knowledge about sales tax.
And I am going to apologize because this poll question wasn't supposed to have, anyway, it just doesn't work. So what I'd like to ask people to do is if you can just type, if you've been through an audit, which state, into the question bar, and then I'll sort of summarize it. And if you haven't been, you can just not do anything. Sorry about that.
So yeah, if you've been through a sales tax audit, just share your feedback, which state you've been audited in, and then we will share the poll results with the audience. So let's proceed to the next step. So this is just to give you guys an overview of the landscape of sales tax in the country. So sales tax is a very unique concept. It's only a US and Canada based construct. And it's a tax that's based on your income or your inputs for a particular, not income, I'm sorry, your transactions is a transaction-based tax. So whereas federal income tax taxes your income, sales tax actually is more geared towards your actual gross receipts and your transactions that occurs in your business. So for the entire country, for the United States, for fiscal year 2018, all states collected around $781 billion. Of all the 45 states that have an enumerated sales tax on their books, the top 5 states would be Illinois, Florida, Texas, New York, and California. So California by far is the highest collector of sales tax in the country at $105 billion. Illinois is the 5th largest at $33 billion. And Texas is right there in the middle at $81 billion. So as I stated, sure.
Oh, I just wanted to let you know we've had one sales tax audit, which was in Illinois, just for your information.
All right, that's good to know. So of the 45 states, of all the states in the country, of 50 states in the country, 45 states have a sales tax in the District of Columbia. And of all the income that a state receives, 85% of that income is derived through sales tax. So that just gives you an idea of how the states interact with the sales tax law and how important it is to different state budgets. Sales taxes on business inputs are the largest state tax paid by businesses. So of all the state tax that's paid in the country, 31.6% are derived through sales tax. This slide talks about a little bit more about the economics of sales tax. There are 5 states, as we said before, without a sales tax. That's New Hampshire, Oregon, Montana, Alaska, and Delaware. And I have a footnote by Alaska because while Alaska does not have a state sales tax, they do allow their local cities and counties to collect a sales tax. And they administer, each county and city administers their own sales tax program. So to summarize, we have 45 states in America plus the District of Columbia with an enumerated sales tax law on the books. 5 states in the US has no sales tax. Alaska allows local municipalities to impose their own sales tax. But of those 45 states in different local municipalities, there are about 14 to 15,000 on average different sales taxing jurisdictions. So for example, in Texas, there are about 500 plus taxing jurisdictions, meaning that it could be a special purpose district because of an entertainment area. It could be a school system that has a sales tax, different municipalities, local and county, they all have their own special taxing jurisdictions. So when you put it all together, we're looking, the number continues to grow, right? We went from 45, now we're up to 15, somewhere, I would say about 15,000 different taxing jurisdictions on the books all over the country. To make it even more complicated, of the states that have a sales tax, some states allow a law called a home rule law. And that allows, within these states, the different local municipalities to have their own specific taxing jurisdictions and authorities. They can come in and they can audit you separately as a city or a county. They have their own definition of their tax base. They define their own tax bases. So again, if you're in Alabama, Alaska, Arizona, Colorado, Illinois is one, and Louisiana, not only do you have to abide by the state's sales tax laws, but you have to further abide by the cities and counties and their different laws. So all of these different states, counties, and cities have their own levies, their own administration, and their own laws on the books. So that makes it even more complicated. Poll question number 2.
That's me. Let me get this launched up here for everybody. So if people can go ahead and enter the answer to this question. And Megan, I will make sure that your question about the tax exempt certificate is answered before we're done with the podcast. Or, we keep saying podcast, with the webinar. Okay, so I'm going to close the poll in just a second. We have a few responses, and not everyone has voted. Come on, you guys. We're basing this this program in Chicago where everybody has to vote at least twice. It's the law. All right, we'll close the voting, and let me share the results. So we go from people who've heard it too many times that they can even count to people who've never heard of it. So we're all over the map.
So I see the majority of people have never heard the term Nexus. So this is going to be a treat for you. We're going to start talking about Nexus next, which is probably one of the hottest topics. It is the hottest topic in sales tax world today. In 2018, we had a huge Supreme Court case that was heard by our U.S. Supreme Court. It was called Wayfair versus South Dakota. And based on the laws that was argued in that court case, it changed the landscape of sales tax forever for the country. Now all internet-based sales transactions are considered taxable in this country. And so we're going to discuss that. The new law is called Economic Nexus. So we talked about the law, South Dakota versus Wayfair. They created a law, this court case created a new law called Economic Nexus. Of all the 45 states that have an enumerated sales tax law, there's only 2 states that have not defined economic nexus. That's Missouri and Florida. Everyone else has basically defined what economic nexus means to their state. And we will talk about what that means for your business. So economic nexus, as based in the Supreme Court case that was decided last summer, now means that every sale that you make into these different states creates nexus. So there's different thresholds to determine whether or not you have created nexus in that state. So there's a gross revenue threshold and there's a number of transactions threshold. Okay, so let's look at Illinois, for example. Illinois has stated on their books, in their laws, that once you have sold $100,000 in gross revenue, not taxable revenue, but gross revenue to the state of Illinois, you have economic nexus. Once you have sold 200 transactions into the state of Illinois, you have established economic nexus. So it's either or, whatever comes first. Once you have crossed those thresholds, you are now required by that state to get registered and start collecting sales tax going forward. So every state has created their own threshold. As you can see, Alabama says it's 250,000 in gross revenue. They don't care so much about the number of transactions. They're only looking at the dollar revenue that's generated in that state. So California is 500,000. And again, they don't care as much about the number of transactions. Indiana is 100,000 in gross revenue and 200 transactions. Kansas says the very first sales transaction into their state, you have established economic nexus. So they don't have a threshold. They want tax on the very first transaction that hits Kansas. Louisiana is 100,000 in gross revenue, 200 transactions. So every state has their own de minimis rules for what they allow before you hit the economic nexus threshold. So this is the document that you guys can download, the handout that's provided in the seminar. You can download this table, and it's updated through September 2019. So I stated earlier that Missouri and Florida has not defined their economic nexus laws, so they won't be found on this table. But I would imagine that they will be rolling something out within the year. So before December 31st, you probably will have to add them to the table as well. But I want to just move around a little bit just to show you how varied the law is. Oklahoma says it's only $10,000 worth of gross revenue, and you have established economic nexus in Oklahoma after that point. They don't care about the number of transactions. So again, download this table. If you are selling on a multi-state basis, this is something you have to be very familiar with. You have to keep track of this. Once you hit this threshold, you have to get registered and you have to begin collecting sales tax in that state. That is the law of the land. So now companies have to be aware of this and keep track of it and start to comply. Okay, if there's any questions, you guys can drop it in the chat room, but we're going to move forward because you were quiet. So I assume that this makes a lot of sense to you. But as you can imagine, go ahead.
Well, this is Karen. I just want to make sure to clarify. So you've got Rhode Island up, so let's just use that. So let's say that I sell $100,000 in Rhode Island. I know that I have to start collecting after 100,000, but do I have to have paid sales tax on that first 100,000?
No. This is the threshold that they have, the line that they've drawn in the sand. So you owe sales tax on the $101 transaction. That $1 over the threshold is taxable.
Thank you.
You're welcome. So again, this is a new tax law. A lot of people don't even know that it exists. That's why I asked the question, who's even heard the term nexus before? We have been getting tons of calls, as you can imagine, in our office as people are starting to realize that this law has passed. And so we wanted to bring it to you guys so that you're aware of it as well.
Here's a question that's just popped up that I'd like to just throw in here. So if you are selling to clients in multiple states, are you paying to the state where you are or the state where the client is? And related to that, is this for both online and in-person sales?
Very good question. So from the state's perspective, they don't care if the sale is online or in person. That's not their concern. They're only looking at the gross revenue that is derived in their state. So it's always going to be based on the benefit location. And in the audit scenario, they're going to look at the ship to address first. So wherever you're shipping to. And if they can't determine whether goods are sold based on a ship to address, they're going to look at your contracts. They're going to look at your bids. They're going to try to figure out where is this item being used or sold to. So it's always going to be based on the benefit location, not based on where you are physically. Okay?
Thank you.
Yes. So we have poll question number 3. So we're moving through these concepts pretty fast. So you guys shoot your questions out as we go so we can address them.
So we've got a few people voting. The early returns are coming in. Oh, this is so exciting. It's like election night. We'll give people another couple seconds to vote.
All right.
All right, so let's just go ahead and close that poll. Oh, nope, we still have some voters.
Okay.
All right, and so now we're going to close it, and here's the results.
Okay.
So about half of the participants on the call are in services or software, a quarter in manufacturing, and then 13% in the retail, restaurant, hotel, and 13% in other.
Okay. So this is very interesting that services and software is the biggest chunk of the audience, because you guys are probably gonna have more Nexus concerns than probably the audience, because you're selling software and services probably all over the country. And if you're doing software as a service and people are accessing and downloading all over the country, this is an economic nexus is going to be really important to you going forward. So now I want to talk to you a little bit about when you're selling or you're operating a business, how important it is to maintain your documentation in case you are audited. So now we're going to move more into an audit phase. What should I be concerned from a transaction level, in a sales level, in purchases for my business, where audit is concerned? What documentation do I need to have on hand? One of the two documents that's very important when you're undergoing an audit is your certificates. There are two types of certificates. There's a resale certificate and there's an exemption certificate. So resale certificates are, if you have a taxable item that is being purchased for resale, then that item is actually exempt from sales or use tax if the seller accepts a properly completed resale certificate. So instead of collecting sales tax, you have to collect the certificate, and that protects you in the audit scenario. So for example, if I am selling, furniture, and the furniture is going to be placed in a store somewhere and then resold in that store, then in lieu of collecting sales tax, you're going to collect a resale certificate, because you're not supposed to collect tax several different times. Because when the furniture store sells your furniture, or the furniture, to the end user, they will collect the sales tax. So that's the scenario one of the scenarios where a resale certificate would be issued or received. So
Chanel, I'm going to throw in a question here from Megan now.
Sure.
And I'm going to read two questions because I think that they're related.
Okay.
I am tax exempt in Illinois, she says. We sell machinery for manufacturing. Sometimes our vendors ship to our customers located outside Illinois. I will collect our out-of-state customer's tax exempt certificate and forward them on to the vendor to prove that the customer is tax exempt. I recently had a vendor say this is not legal. Is that true? And then her second question is, if my customer is not tax exempt and I don't collect tax exempt, since 99.99% of our customers are tax exempt, is it okay to put on, this is a separate question, so we'll come to that separately. But her first question is, in the machinery manufacturing business, and she's collecting the out-of-state customer's tax exempt certificate and forwarding them to the vendor, and then a vendor said that's not legal.
Okay, so good question. It's going to vary state to state. So California will require you to have their specific state form on hand. So some states, is agnostic. They don't care what resale certificate you collect. But if the transaction involves California, they require you to have a California resale certificate. Okay.
And is the concern, Megan, that the sort of not legal part, is that because this person thought that you shouldn't send the certificate on to a third party, or I'm not sure I fully understand the question.
So if the customer that they are working with is issuing that state's resale certificate. So let's say, a Texas resale certificate, for example. But then the actual receiving customer don't want to accept Texas. It could be a matter of what states are involved and why they're rejecting that certificate.
Okay. Related to that is a question from Andy, who is based in Illinois, sells coffee and tea, and uses a resale certificate when purchasing coffee beans. Should he be?
He is buying the coffee beans to manufacture something, or is he reselling the coffee beans?
That is a good question. And Andy, I'm not sure. So why don't you answer it? Oh, I guess the answer is yes. he just popped in yes. So
is he's buying the coffee beans to manufacture coffee. So
yes, it sounds.
I mean, it's a resale. It's basically, you're going to be reselling in a different form. So yes, a resale certificate is appropriate.
Thank you.
All right. So I'm going to show you a copy of the Illinois resale certificate so we can walk through this form. This is what the Illinois Department of Revenue's certificate looks like. And I have a few pointers for your certificates. Make sure that when you collect it, that you actually have it completed on its face, that every block or every section that's highlighted that needs to be completed is actually fully completed. In an audit situation, if anything's not signed or dated, or if a block is left empty, or if it's partially incomplete, they can reject your certificate and not accept it in the audit, which makes the certificate subject to audit. And you don't want to be in that scenario, because if they reject your certificate and they have to audit it and they try to reach out to the company that issued it and they're out of business, then you're left holding the bag, so to speak. Now you're liable for the sales tax that you should have charged. So it's best to, in our instances for our clients, we complete the resale certificate on the face, and we just have the actual seller just sign it and date it, so that we have more control over what's put on the certificate. It actually, on step 3, it tells you to describe the property that's being purchased for resale, or list an invoice number and the date of the purchase. The reason why they are asking you to do that is because they want to make sense. They want the certificate to make sense on its face. So for example, if you're a coffee business, for example, and someone issues you a resale certificate for purchasing desks, that won't be acceptable in the sales tax audit, because you're not in the business of selling desks. So again, to control and make sure that you have as much, complete and accurate information when you're having to defend your sales transactions, my recommendation is to complete steps 1 through 4 yourself and just have them to sign off on the bottom. As much as you can control and make sure that you have, are aware of what's going on in your business, the better.
Chanel,
Sure.
Another related question is from Stephanie. She asks, I teach craft classes. Do I have to pay taxes on the materials that are used in the class?
No, because it depends on what she's purchasing.
Okay,
So
I don't have anything more specific, so if you want to go ahead and maybe explain she says supplies. She says supplies.
Paint and canvases, you have to pay
Sure.
tax on those raw materials that go into your class, yes.
Okay. Thank you.
Supplies. Okay. So let's talk about exemption certificates. These are very interesting, and we sometimes see our clients get confused about when and where to use an exemption certificate. So a seller may accept a properly completed exemption certificate from exempt entities or for exempt transactions in lieu of collecting tax. So the most common way to issue an exemption certificate is for manufacturing purposes. So if, in Texas, for example, manufacturers have certain enumerated exemptions, and in Illinois, the same applies. So if there's exemptions that's enumerated for your transaction, then you would issue an exemption certificate instead of paying sales tax.
So related to that is a question from Terry. In Illinois, under the expanded machinery and equipment exemption, are items which are exempt from the state sales tax also exempt from county and local taxes? And if not, how would those be paid?
Typically, yes. If it's enumerated as exempt in the state tax code, then typically county and state will follow those laws.
Thank you.
All right. So here's a copy of the exemption certificate for the state of Illinois, and it lists manufacturing, production, agriculture, and coal and aggregate mining as enumerated exemptions in Illinois. But I'm sure there are others, and there's probably certificates related to those particular exemptions in Illinois as well. But this one covers those types of exemptions specifically. And again, the same advice would apply. You know, complete as much of it on the face that you can and issue it to your customer and have them to sign it. So now that we've talked about documentation, I want to talk about audit leads. So a lot of you may be wondering, you know, how likely is it that I would even have to deal with this? How likely is it I would audit it? You know, why should I care about any of this? And I want to talk to you about audit leads and how people are selected for audits. So there's certain industry targeting that's used by different states, as well as they look at association and council memberships to determine who's operating in their state. They may go in and audit trade shows. So if you're participating in a different state's trade show, a lot of times the state will send employees to visit the trade show, walk the trade show, collect business cards, and that gives them an indication of who's operating in their state as well. An easy way for them to find you would be payroll tax filings. And also, if your transactions come up in your other in your customers' audits. So that's an easy way for them to pull your invoice if it comes up in the audit, and then they use those invoices to generate leads for new audits. So again, audit leads, your vendors could be audited, your customers can be audited. Sometimes they'll even go to the airport and pull customs information and audit that list and generate leads that way to see who's getting products shipped into the state from foreign countries. And at the end of the day, they actually have a random selection process that they could use to just find you if they're just looking at specific industries that you can just randomly come up. So let's talk about the audit process. There are 4 phases to an audit. There's the initial audit phase, the audit fieldwork phase, an exit conference phase, and appeals phase. So that in every state, there's typically those 4 phases that you will go through in the audit.
Okay, this is back to Karen. Number 4. Here we go. I will also take this opportunity to remind folks who came in a little bit late that on the GoToWebinar toolbar that you should have probably on the right-hand side of your screen, there are handouts, or there's a handout which is the Nexus list. You should download it during the webinar, the live webinar. If you do not download it during the live webinar, it will not be available. So you want to just make sure that you do download this. If you're watching the recorded webinar, you are able to reach out if you want to myself, the Women's Business Development Center, Kay Goldner at wbdc.org, and I will send it to you. But in general, it's not available after the webinar. So we only have 44% of the people who voted, so let's give a couple more people because I'd like to just be able to get a better answer on this question. So if folks could vote, please, we're going to then go ahead and, all right, we'll just close it at 50-50. So here you go, 50-50.
Okay. All right.
Some people are and some people aren't.
Okay. So let's talk about the audit process. So in the audit process, the first phase you're going to go through is an initial audit phase. The taxpayer will be notified that they have been randomly selected for an audit. So it's kind of a letter that says, congratulations, The state of Illinois will be auditing your books for where sales tax is concerned, and it's going to give you some instruction, ask you to, fill out a form so they can gather some initial information from you. And they're going to also tell you who your auditor is, who's assigned to your audit, and kind of give you some dates and outlines about how to prepare and when they should start the audit. So they're going to give you time to prepare for the audit. This step is very, very important. A lot of times taxpayers will kind of let the auditor lead and tell them when they're going to start the audit. I would advise you to push back on that and really take as much time as you need to prepare for an audit. If that means you need 6 months or 9 months, ask for the time that you need to prepare, because the amount of records that's required for a sales tax audit is very extensive. So if you're missing items, you don't want the auditor to start until you have everything gathered and prepared and organized. So ask for the time that you need. Don't let them force an entrance conference date on you. So entrance conference is literally the beginning of the audit, the kickoff of the audit. Sometimes the auditor will say, don't worry about it. I'm just going to come out and meet with you. It's just a meet and greet just to get to know you. And they will, kind of present it as if the interest conference is not that important. It's kind of benign, but it is very important. And once they come out and meet you formally, that actually officially kicks off the audit. So I would delay an entrance conference and I would delay an audit start date until you're adequately prepared. So here's a copy of the letter from Texas. It says, the Comptroller of Public Accounts has an assignment to conduct a routine audit of your company for sales tax. And it talks about, it asks you to fill out this questionnaire, and it asks you for your address, your taxpayer number. It may ask you where your records are located. That's important as well. If you want the audit to be conducted outside of your office, which we recommend that you do that. Don't let them come into your office or place of business to conduct the audit. You want to make sure that you tell them your records is wherever you're going to want them to conduct the audit. So if it's with a bookkeeper or a CPA, then put their address down. And
Chanel, I want you to kind of repeat that again, because I'm not sure that that's intuitive for folks. So if my business is contacted and I'm based at 8 South Michigan and Chicago, and that's where my records are, but you're suggesting maybe that I should use my CPA's office, for instance, and use her address as the location of where my records are. If you can just talk through that again, I want to make sure people understand what you're saying here.
Yeah, so they will ask you where your business is physically located, but they will also ask you where your records are located. So for example, in Texas, we have all these little cities and that's close to each other, but it may actually mean a change of venue for the audit. So for example, you may be located in Dallas, but your records are in Plano, or your records are in Austin. It could be a different city altogether. If your CPA is located physically in another city and you want them to go to your CPA's office or a representative office, you want to make sure that you say that that's the city your records are located. Because sometimes if you put down your place of business as where your records are located, they may make a fuss of it and say, well, we don't want to transfer it to, your CPA's office because, it's convenient for you. But it's actually more than convenience. You really don't want the auditor in your place of business, because one of their audit techniques is observation. They're going to be in your office. They're going to be listening to your phone calls. They can pop up on you when you're in your office and ask you random questions. They just have more access to you. And it's very disruptive to your business, but it also probably gives them more information than you want them to have. You don't want them in your business listening to conversations and asking your employees questions. It can get kind of disruptive and crazy. So we've always provided for our clients a place for them to come to, the auditor to come to our office We seclude them even from our work environment, so they're not sitting around our consultants. You have a separate private conference room for them. It's a nice conference room. It's well lit. The furniture is nice. It's very cozy in here, but we just don't want them to have so much access to our clients. Any questions they have come through us. If they want to meet with the client, it has to be for a very good reason. You really want to separate yourself from the audit environment, because it can cause so many problems. We've seen it happen so many times. So I hope that makes a little bit. Okay.
Yeah, thank you.
And besides the fact that you want to run your business and earn money, you don't want to spend your whole time, held up in an audit. So that's another good reason to kind of separate it. So this is like a general list. It's really a boilerplate list of records that they will request to get started for the audit. A lot of times the taxpayers, they get this list and they get very intimidated because they don't even know half of the stuff that's on the list. And it's really just a list that they put together over time. So half the stuff on this list probably has nothing to do with you, but you may rack your brain thinking, I don't know what a job file is. What does this mean? I can't find this. I don't know what this is. Don't get so caught up on what they're asking you for, because it may not even apply to your business. So the typical things that they're going to need to see is your purchase transactions. You're going to need for any fixed assets or huge, large transactions that you've purchased over the past 4 years. They typically look at 4 years. So if you had any capital expenditures, large purchases, you need documentation and support to show that you've paid sales tax on those items. And also for your sales transactions, you need to be able to have a summary of your sales for the past 4 years that ties to your sales tax returns, and bank statements is very standard. And you're going to need to have actual detailed sales invoices for them to look at. And also your certificates. So if you claim any exemptions, you need to have completed certificates for them to review as well. So those are the basics.
I'm going to just jump in here with a question. It's the last one that hasn't been answered, and anyway, I'm just going to go ahead and ask you right now, Chanel. So if my customer, okay, so this is the manufacturing equipment manufacturer. So if my customer is not tax exempt, and I don't collect tax since almost all of my customers are tax exempt, is it okay to put on the non-tax exempt customer's invoice that they're responsible for the use tax? I was told by the Illinois tax auditor I could do this. What is your opinion?
No. If you're being audited, you're going to be responsible for the sales tax, even though the auditor told you that. Unless you get that exact same auditor again, a new person may reject that thought process completely. At the end of the day, it's your responsibility. So they will require you to pay the sales tax in the audit. And I would say that the auditor that told you that was just really, really nice.
You must be a charming person, Megan.
I would not hang my hat on that, though. I mean, you want to protect yourself and protect your business. So now we're going to move forward to the audit fieldwork phase. So we talked about the records that's typically required. They're going to come in, they're going to examine your records. If you need more time to prepare records for the auditor to review, and it's going to cause them to lose some of the statute involved in the audit, meaning that they're going to look back by 4 years, typically about 3.5 to 4 years. If you need more time because there's something that you can't find, or some type of some support that you need to get an error off the audit, they may ask you to sign a statute waiver, because they want to protect legally those 4 years. They don't want to lose any statute, is what they consider that. So if the request for you to sign a statute waiver is for you because you need the time, I would absolutely say sign it. If they're asking you to sign a statute waiver because the auditor is going on vacation and they just don't have time to finish this audit, I would push back on that. That to me is not a legitimate reason to sign a statute waiver. If they've scheduled the audit and started the audit, they should have planned adequate time to complete the audit. So typically the statute waiver is to protect the state, make sure that they don't lose any money, but it's typically to your advantageous to you if you are requesting more time to get documentation to complete the audit. So once they've examined all your records, they will then schedule some time to come and discuss the examination, any errors that were found. They will give you supporting documentation and schedules to actually list out every error in the audit. And then you will have an exit conference. So if you've proceeded to the point where you agree with the audit, you've completed the work, and you're ready to move forward and sign off on the audit, then you're in good shape. You know, you've agreed with what they found, you have no issue with it. That's a good place to be. There is another phase that you can move forward to if you don't agree with the audit, and we'll talk about that a little bit later. But I want to spend a little time talking about sales tax versus use tax. We've been talking about and using these terms interchangeably, but I want to make sure that you guys understand the difference. So a sales tax exam is when this focuses on the seller's sales tax on sales transactions. So they're going to be scrutinizing your invoices, your sales invoices, and any supporting documentation to support any exemptions that you're claiming. So if you have a sales transaction and you don't collect sales tax, you should have support to actually back that up. So that's the sales tax exam. So it looks at tangible property that you're selling, like actual physical items, as well as some states have services that are taxable. The use tax exam, on the other hand, focuses on all the items that an entity purchases to then use in your normal operation and business. So taxable services such as in Texas, for example, websites are taxable. If you pay someone to build your website, that's actually considered taxable services. Janitorial is actually taxable. Landscaping is taxable in Texas. Also, when you buy things to use such as computers, furniture, office supplies, all those items are taxable and you have to actually pay tax. So that's considered a use tax because you're using those items in order to operate your business. So they're going to want to look at your purchase transactions. They want to make sure that you're actually paid tax on it. If someone does not charge you tax, you're supposed to accrue that tax and then add it to your sales tax return. So next I want to talk about tangible products versus services. So tangible products, everyone pretty much understands that if you're purchasing or selling a widget, such as, office equipment, furniture, fixtures, clothing, computers, office supplies, people pretty much understand that tangible goods are taxable in this country. Services, on the other hand, they are very much more gray and not as understood. So if anyone on the webinar is, they purchase Dropbox or QuickBooks Online or some streaming services, in a lot of states, those different services are taxable. So Netflix, Amazon Prime services, different software service is taxable. So that's an area that's kind of gray, and people don't realize that if you're purchasing these different goods in different states, then you could be creating an issue for yourself if you're ever audited. So we're going to talk about the exit conference phase. So the auditor is going to provide you with audit schedules. If this is your first time being audited, you can request a penalty or interest waiver. So penalties is what they sound like. There's basically a penalty associated with every audit because you have errors. And then there's interest that's accrued from the time of the transaction that's an error listed on your schedules. So if you've never been audited and the audit was not, the error was not due to fraud or due to maliciousness or, just done, on purpose, then typically you can write a letter requesting that penalty and interest be waived because you're going through the audit for the first time. Most times they will review your request and the reason why you're asking for it and give you some relief. So that's something I wanted to point out that is available to you if you're being audited. Then if you don't agree with the results of the audit, you can request a reconciliation conference. And this is a conference with, you're still in the audit phase. The audit has not closed, but you want to talk to the auditor's supervisor or manager. And sometimes this can be very helpful because if you're dealing with an auditor and you guys have spent a lot of time together, maybe you guys are stuck on a particular issue and you can't see eye to eye. Sometimes a third party, such as a supervisor or manager, can step in and give their opinion and resolve the matter and take it off the audit. That happens quite a lot, especially depending on the nature of the issue or the dollar amount. They may just tell the auditor to take it off. So I want you to be aware that you don't have to feel like you're stuck with the results of your audit, that you can advocate for yourself and request meetings with higher level people that can come in and give their third party advice and opinion. So let's say that you've closed the audit and you're still not satisfied with the results. You then move into what's considered an appeals phase, where you have additional remedies that's available to you. So you can file an initial audit protest. This is an informal review with the state of Illinois or with the city or the county. And they will, these different appeals processes take time. So sometimes it may take 60, 90, maybe even 6 months to get to your audit phase or to your appeal. Most times you're still going to be accruing interest during this appeals phase, so keep that in mind. But again, if it's something that you really believe you don't owe the tax on, and if the money is significant enough, I would absolutely encourage you to request a protest and have them to do a review. Once you pass the initial audit protest, then you enter into a hearings process. And a hearings process, the first phase is again informal, where an attorney for the state or the city will contact you, review your case, and then they will give opinion. Now the goal is, once you pass each phase of the appeal, you want to gather information as to why they're denying your appeal. You want to ask as many questions as possible, because the next phase, you want to present more support and more documentation, new information to support your case. Don't keep providing the same support, because if they're rejecting it, there's a reason for it, and they're probably going to reject it again. So, for example, if it's a sales transaction and you knew you paid sales tax on it, and you come in and you provide the sales tax returns, but they can't support why you think you paid sales tax, they're going to reject it. Well, then you have to dig a little deeper and maybe contact your customer, get more support, get more documentation, and present more information in the next phase. So let's say you get through your initial audit phase, you get through the hearings process, then you'll get assigned a judge. It becomes more formal at that point. Once you get to a hearings phase with a judge, then you want to have an attorney representing you, because then you're in a court of law and you're dealing directly with a judge, and you really have to have your documentation and ducks in a row. And we have, dealt with hundreds and hundreds of audits. Typically, we fight very hard to resolve errors or issues in the audit phase, because once you get to the appeals phase, it starts to really add up the cost. So it becomes like a cost benefit. Am I fighting this? Is it worth my time? Is it worth the money that's left on the audit? So you have to weigh the benefit of moving forward and fighting. Do we have any questions? I hope the quietness means that you guys have all your sales tax questions answered now. You know everything that you ever needed to know about sales tax?
There you go. Or they're writing your website name down. At this point, we don't have any additional questions, so we can just go ahead.
So I'm going to move to our final slide here. If you guys have any questions or you want to reach out to us for any reason about a specific case.
We just have this one last poll here. We've got some people voting. And I do want to remind you, excuse me, that Chanel's company website is ddhtax.com. It's been down at the bottom. And as I said, she's been in the business for a long time, which having met you, Chanel, I think you must have started when you were about 4 years old. But we are really just very, very grateful for you sharing your expertise with us today. I have learned a ton.
Awesome.
We're going to just let people continue to vote for just a couple more minutes, and then we'll shut off the poll. Okay, I'm just going to go ahead and close the poll now. It does look like most people the majority of people are not selling in more than one state, but a significant number of folks are. So.
Okay.
Okay,
so thank you for having me. Be encouraged. There's a lot to learn, I know, where sales tax is concerned, but it's totally doable. And as you grow, just keep in mind that you need to be aware of different laws in different states as you expand to other areas.
Thank you again, Chanel. And I do want to give people one last minute so here we do have one last question, but then before I get that question to you, Chanel, I wanted to remind people that if you want the handout, which is the Nexus Chart, the list of all the different states and their limits, which is frankly information that you're not going to be able to easily find somewhere else, I would please download that now because it will not be available after the call or after the live webinar. And so Stephanie asks, how do we apply to collect sales taxes?
Good question. So for the state of Illinois, and I'm going to back up so that you can see the documentation that I pulled off of your state's website. Your state taxing jurisdiction for Illinois is the Illinois Department of Revenue. So you want to Google Illinois Department of Revenue, and there will be a business tax section of that website. Go online and there will be an application. Most likely it will be an internet-based application or something you can download and complete those forms and send them in. And they will assign you a reporting schedule. Either you're going to report annually or quarterly or monthly. And that's going to be all based on the dollar amount that you say that you sell in a year. So for example, if you're selling $10 million in the state of Illinois, you're probably going to have to report monthly. If you're selling $2,000 a year, they're going to ask you to report annually. So it all depends on your sales volume. That determines how frequent you would have to complete your sales tax return.
And so then what people should do is they should look at the Nexus Chart, which I will, for the last time, just remind people you want to download that now, which out of the handout section. And see, I'm also selling $200,000 a year in another state where the Nexus is $100,000, for instance. Then I should go to the kind of comparable website for that state and do the similar process. Is that right?
That's accurate. So just to make it more confusing and difficult, every state has a different name for their Department of Revenue. Like I said, in Texas, it's the Comptroller's Office. California is the Board of Equalization. New York is the Department of Revenue. But if you put in a Department of Revenue in a state's name, then that governing body will pop up.
Excellent. Okay. And Margaret has one last question. Can you talk about when you have to or not have to pay tax on shipping? So not on the product, but on the shipping.
That's a great question. It's going to be depending on the state that you are operating in. So for example, if you're selling goods in the state of Texas, shipping is taxable. Every state is different. So that is another question that you would have to have evaluated to figure out if the state where you're doing business taxes shipping.
And so would that be let's just say that I'm in Minnesota and I'm shipping all around the country. So what I would care about in that instance is what Minnesota's laws are, or I would have to worry about the laws of the state where I'm shipping to?
That's a great question. It's always going to be on the benefit location. So wherever you're shipping to. Great question,
Okay.
Karen.
So Margaret, sorry to give you that bad news. It's just more research, unfortunately. But would that shipping question then also be subject to Nexus, Chanel?
So absolutely. So for example, if you're shipping out of state and you don't have Nexus in that state, then of course you're not going to have to register and start collecting that state sales tax. But as soon as you cross the threshold, then yes, you're now responsible.
Terrific. And what Margaret says is that she was audited, and the auditor said it depends on if you notify the client if they can pick up the product. That determines whether or not they should have taxed.
So that varies by state as well. Every state has different laws. Every state has different regulations. That would not apply if you're shipping to Texas.
Margaret, can you say whether you're based in Illinois or not? Just because I think many of the people on the call are in Illinois, but yeah, she says, yes, she's in Illinois.
And where is she shipping to?
Yeah, were you shipping in Illinois, Margaret, or outside? Yeah, I was not aware. She said it's an expensive mistake. And she was shipping outside of Illinois? Because shipping can be substantial depending on what it is. Oh, no, inside Illinois. So this was
she's shipping inside Illinois. So we would have to look at Illinois' laws for shipping. I'm not familiar with that off the top of my head, but that would be something we would have to research. But you're right.
Yeah.
If you can imagine, depending on the size and how much your shipping costs are, it adds up really, really quickly. And you don't want to be, stuck with that bill when you're audited.
Right, right. Well, I am going to, okay. So Margaret says, who was responsible to let us know this? Our accountants did not notify of this.
So thank you, Margaret, for asking that question. I'm going to say that CPAs, we work with a lot of CPA companies, large firms, some names you know, some you may not know, regional firms, small-based CPA firms. This is not their area of expertise. They partner with us because we are sales tax advisors and consultants. Their primary focus is federal income tax or state income tax. Sales tax is completely different. It's a totally different section, a subsection of tax, and that's not their area. They would never know what your transactions look like because they never see your sales invoices. They never see your contracts. So they're not equipped to advise you because they never see these supporting documentation. How would they know what you're charging and where you're charging, what you're charging on? They wouldn't know.
So at the end of the day, it's kind of not let the buyer beware, it's let the seller beware, might be the way of summarizing sales tax, right?
Well, what happens is
check your own states, and
when you're operating in a state like Illinois, if you're based in Illinois and you have a business in Illinois and you're operating in that state, you sign a contract with the state of Illinois that states, I want to be able to operate in the state and collect sales tax from my customers. A part of that agreement is that you are aware of the laws. That's a part of what you sign up for. So they are expecting you to find out what all the laws are surrounding sales tax as it pertains to your business operation. That's the way they do it.
And that's why I think that that having this kind of resource is so valuable. And I thank you, Chanel, for your generosity of your time and especially your expertise. I'm going to keep the webinar open for about another 30 seconds. So if you haven't downloaded the Nexus chart, now is the time to do it. And then I am going to say thank you very much. And I hope that everyone has a wonderful afternoon. if you need assistance from Chanel's firm, you can see the contact information there. And again, she operates nationally. So thank you all very much, folks, and have a great day.
Bye-bye.